What would it take for you to sell off actually Credit Suisse share? Because you've stuck with them no matter almost what happens.
Well, this has been a problem child. We've owned this bank literally since the early 2001. And the first 10 years was a very good holding. I mean, it literally went from 20 to 60 or 70. Now, what we should have done is just sold it and that's it. But of course, during the financial crisis, they actually performed better than most other banks. And we increased our position again and had a very, very poor decade holding Credit Suisse as they've kind of hobbled from one crisis to the next. So what's the situation today? The last 10 years certainly have been bad, very bad for the bank. But you look at the situation today, it trades at less than a third of book value. It still has a robust private wealth business. I mean, they have 4 businesses, one of which is absorbing the profits of all the other 3. And all they have to do, really, it sounds simple, but all they have to do is prevent the investment bank from losing money and get it back to some sort of growth.
What would you do with it? Would you spin it off?
If they cannot fix it, if they cannot find a way for the investment bank to earn through cycle returns, they have to do something with it. Whether it's spin it, sell it, merge it. But at this stage, the price of Credit Suisse stock assumes roughly a 10 to 15 billion negative on the investment bank. And if they can repair the investment bank, make it such that it can earn through cycle profits, clearly it's worth more than negative 15 billion.
David, how much time should they try and fix it before they sell it, or spin it off, or do something with it?
Well, certainly in the next year or two, this has to be decided, but you can't keep doing the same thing as they've been doing over the last decade and get 0 results. They have to put an end to it. At some point, they either have to fix it or to look for other options.
Other options? I mean, do we need to think about a big merger? I know regulators are not behind it, but is this a way of putting it out of its misery?
I mean, all of the above. I think the most obvious thing for shareholders would be to try to fix it, to prevent them from losing money, to get that part of the business to earn money again. They have some very good franchises in there, and there's no reason why they shouldn't be able to ring fence the good franchises, exit the places where they cannot make through cycle returns, and continue. So the best thing for the shareholders would be for them to fix it. But if they cannot fix it, you can't just keep doing the same thing and expect a different result, as the saying goes.